Just want to review this one really quick. Um, this is USDJPY. We're on the 4-hour timeline, and people were asking me why I took the sell and where I got in, and a lot of that kind of stuff. So let's just sort of start to basically get into that. I'll tell you right now, the only indicators I'm using are my SMAs, 250 and the 21, and that's what you see in these here. Um, Realistically, they kind of just give you a basic idea of what the flow, of the actual trade looks like. Obviously, when it crosses, sometimes you can catch some really good ones. This was back in the fall. We caught some of this run up, not all the way to the top. That would have been awesome. Maybe someday we'll be good at holding it like that, but pretty much took it profit down in here. Anywho, so we have this huge rally in the dollar. It's been happening pretty much, for Q4 of 2021. And we get up into here, and this is basically, we have all these heightened sort of cases of Omicron, um, with that COVID variant. And this is actually going to be kind of a fundamental setup. Obviously, there are technicals involved, and we're going to review those. But there's also some fundamental bias that exists here as well, with the dollar being bearish. So the reasoning for that is sort of threefold. We know that there is a heightened amount of cases happening in the United States with COVID, the coronavirus, the Omicron variant, which is super highly contagious. There was also financial data released about the increase of people that are quitting their jobs. People are seeking the ability to work from home, do some creative stuff, digital media, whatever it might be. But more and more people are quitting their jobs. And then beyond that, there's like two more things. We had NFP week, and the data that came in for NFP was 197,000 new created jobs, and the projected was 800K. So it came in at like 600,000 less, which is obviously really significant. And then we also had, which is for the big push, when Powell testified again with the Fed Reserve stuff. So that's the fundamental things, is that we're bearish on USD for those reasons, for the dollar. Okay, so as far as technical analysis is concerned, this is why we got into the trade. All right. So we know we've got the downward trend starting here, right? Came down to this point. This is where I pulled my fib to, right in here. Okay. So we see that it comes into our little, basically comes down, touches the SMA and rejects, which is a really good indicator of, a pattern that's going to start. These SMAs aren't always super accurate, but sometimes they can be really, really accurate. So we see it come up, push up, reject the 61 and push down, right? And this is where we drew our fib to before we took the trade. The next move is we have basically what's a breakout, okay? And more often than not, I'd say about 80% of the time, when we have a breakout, there is almost always going to be a retest of that breakout. So in this situation, we see price tank down, comes to this previous, consolidation order block area, push back up, and reject off of our 50 SMA. This right here would have been the perfect entry, but unfortunately, this was during the London session, and I missed it. So it came back down, or I guess this was the beginning of New York session, and I just missed it. And it basically rejects off here, comes back down, okay? And now we have another test of the break, all right? So tried to rally, failed, creates a higher low, right? So, if we're going to draw some lines and talk about support and resistance and lower lows, higher highs, and all that kind of stuff that a lot of people are taught, those aren't necessarily the most accurate ways to trade. They can work and often do in a lot of different situations, but because everyone in retail are so aware of those things, you have to realize that the people that are sort of pushing the market along in certain directions are aware of that too. So a lot of people probably bought here when they thought that there was a lower, a higher low, right? They bought here and they're coming down. But what I'm seeing here is a nice channel pattern that's basically starting, right? Comes up, taps the SMA, and my overall is we're bearish on the dollar versus the Japanese yen. So my entry was the retest again of the channel, okay? So it came up and it touched my SMA right here, and we took the sell. The first TPs basically was a 1-to-1. I didn't even like have much of a stop loss here. This was sent out, but I basically told them to put the stop loss up in the golden zone, and if it gets up to towards their stop, to take a look at it and try and catch some sort of retracement of the move. So with all those things said, now we're thinking, okay, we got a good potential here for a swing trade. Let's take a sell. Took the sell on the rejection right here. Of course, we have our lines crossing here or whatever, but I have an idea that the overall momentum of this trade is going to start heading down. Took it here, smashed the first TP on the first 4-hour candle. Second 4-hour candle, boom, all the way down to TP3. Most people took profits in here. We took some partials up in this area too. I took partials at the first take profit, and then I took partials again at the third take profit. I'm just letting the remainder swing. This trade right here is currently running about 165 pips on usdjpy, and I have a lot of faith that we're going to see it probably come back down into here and have some sort of movement down to here. And I think, honestly, which is crazy, but it's possible. It's very, very possible with the action in the dollar and a lot of things that are going on, that we might see it come back down to where it was last summer, back into this 109 range before it started climbing the ladder here. And if it comes all the way down here, we're looking at a 600 pip move about. So this is a really short one, pretty quick. I hope you guys sort of have an understanding of why I took this trade, what I'm talking about. If you have questions, comment, please. Leave your questions in the comments. I'll do my very best to get back to you. I send out free knowledge on a daily basis. We do have a private Telegram that I basically send trades into, but not as much trades as I do just trying to teach people basically the things that I look for in the market and how I trade. I'm not the best ever, but I am a profitable trader. I've passed multiple funded accounts, and helping people learn is really enjoyable and fun for me. I see a lot of people that are out here spending tons and tons of money and time on all these different things, whether it be courses or MLM companies that do Forex or cryptos, whatever, YouTube videos, paid signal services, and it's just too much information that you're collecting. I think what I have tried my very best to do is figure out a strategy that I consider to be relatively simple and stick to that. I cut down the amount of trades I take very significantly, and I'm really only looking for trades like this. Obviously, this is a huge move. These don't always happen, but more often than not, you take it here and you catch it for 15, 20 pips and you profit and you're good, right? Doesn't mean you necessarily have to hold it all the way down for the additional amount. But with that being said, it's obviously very possible to catch these massive swing trades. And it's about catching them, because you don't always, right? Sometimes, you get the trade from the top here, you say, and it goes 50 pips and rejects. Sometimes it comes down 15 pips and you take your profit, comes back up to entry, and then you can make a decision if you want to take another sell or buy at your previous entry on it. In this case, there was just so many confirmations that were really leaning towards a big drop in it. That's why we took the sell. And I know people like to claim not to trade news, but that's a ridiculous statement. Technical analysis is obviously the most important of the two, but you need to understand these markets. You need to understand macroeconomics and why currencies move in the way that they do and what is causing those things, right? In this case, the dollar's bearish, probably will be for the majority of 2022. And that's based on a lot of economic data that's coming out of the Federal Reserve, coming out of the housing industry, coming out of the workforce. So, if this video helped you guys, leave me a like. Put some comments in there. Like and subscribe. Trying to help people. Doing it for free. So, appreciate y'all. Thank you again.